Want to invest internationally, diversify your portfolio, and access hundreds of assets with a single click? Then you need to know about ETFs. I'm Chad Vermillion. I'm part of the Zero Markets team. Today, I'm going to explain what ETFs are, why they're considered one of the most efficient investments for those seeking diversification, and how you can strategically use them in your portfolio. If this kind of content makes sense to you, make sure to like this video, subscribe to Zero Markets channel, and activate the notification bell so you don't miss upcoming videos. Okay, first of all, what is an ETF? ETF stands for Exchange Traded Fund. It works like a package of assets that replicates the performance of an index, sector, or strategy. When you buy an ETF, you're purchasing a fraction of a diversified portfolio. This can include U.S. stocks, foreign equities, bonds, commodities, and much more. Practical example. The ETF SPY tracks the S&P 500. By buying a share, you're investing in the 500 largest U.S. companies without needing to buy each stock individually. Let's see some key advantages of ETFs. Number one, automatic diversification. Imagine going to the supermarket and instead of picking item by item, you grab a basket already filled with fruits, vegetables, proteins, and everything you need for a balanced diet. ETFs do the same for investments. With a single purchase, you access dozens, sometimes hundreds of different assets. No need to choose one by one. This reduces risk and saves time. Number two, low cost. Think of it like a group gym membership. You share the cost with many others. ETFs operate similarly because they track an index. They don't require active management, which lowers fees. While traditional funds often charge 1 to 2% annually, many ETFs have expense ratios below 0.3%. Over time, this difference is significant. Number three, liquidity. ETFs trade like stocks. You can buy and sell them throughout the day, just like trading shares of Apple or Microsoft. For example, ETFs like SPY or QQQ can be bought and sold at market prices anytime the exchange is open. This intraday liquidity is a major difference from traditional mutual funds where transactions are processed only after market close and can take 2 days to settle. ETFs offer real-time flexibility. Ever wanted to invest abroad but thought you need to open an account overseas or transfer money internationally? With internationally listed ETFs, you can get exposure to US, European, and Asian markets all from a single brokerage account. It's like opening a window to global markets without the need for complex setups or cross-border transfers. For example, by investing in an ETF like SPY or VWRA, you're instantly accessing hundreds of companies across major economies with built-in diversification and global reach. Let's see some types of ETFs you should know. Equity ETFs track indices like Ibovespa, S&P 500, NASDAQ, MSCI China. Fixed incomes ETFs exposed to government or corporate bonds. Sector ETFs focus on specific sectors such as technology, healthcare, energy. Thematic ETFs like ESG, artificial intelligence, or crypto. International ETFs traded on local exchange but mirroring foreign assets. Example, Hash 11 is an ETF that tracks a cryptocurrency index. So why are ETFs a great entry point for beginner investors? Because they simplify decision making. You don't have to pick which stock to buy, which company is undervalued, or which sector will grow. ETFs already deliver a ready-made portfolio. Additionally, they reduce individual stock risk. If one company in the index fails, others help offset the loss. For those starting with a long-term focus, ETFs are a smart choice. Let's take a look at some risks and considerations. Even diversified, ETFs still fluctuate. They are not fixed income. International ETFs have currency risk. If the dollar weakens, returns can be affected. Not all ETFs have good liquidity. Evaluate trading volume. Before investing, read the prospectus, check which index the ETF tracks, and understand the fund's strategy. Now, how to include ETFs in your long-term strategy. Define your goal. Do you want U.S. exposure, currency protection, passive income, or growth? Combine ETFs with fixed income, stocks, and real estate funds to build a balanced portfolio. And remember, ETFs are an enabler. You still need discipline in contributions and a long-term vision. ETFs are undoubtedly the simplest way to invest in global diversification. You access entire markets at low cost in a practical and secure way. But like any investment, they require clarity and strategy. If this video helped you understand how ETFs work and why they can be important for your portfolio, please like, subscribe to Zero Markets channel, and hit the notification bell. And comment below, do you already invest in ETFs? Which ones are in your portfolio? Let's chat.